Maybe you already have some residential properties that you own, some multifamilies, maybe a couple of single family properties, and you've taken out residential mortgages and put down your 20% deposits or whatever you've worked out with your bank, and now you feel like you're doing pretty well. Maybe you're brand new to real estate investing, and the thing that's preventing you from getting started is generating the capital to go invest in the first place, because it's not inexpensive to invest in real estate. You do have to actually spend some money. So maybe you need to gather it from family and friends. Well, part of the issue there is that your family and friends don't necessarily want to be on the deed of another property and guaranteeing a residential mortgage on another property that they're never really going to see or operate day to day. They don't want to deal with the headaches of tenants and maintenance and repairs and replacement and all the things that come with being a landlord. Well, that's why commercial real estate is better than residential real estate. So maybe it's time to up your game. And if you're not sure what I'm talking about or how you could even get into commercial real estate, because residential seems to be the main source of investment that everybody on YouTube talks about, then you're going to be very glad you clicked on this video. Welcome back to Confident Real Estate. I'm your host, JC. So what is commercial real estate? Well, unlike residential real estate, commercial real estate has a variety of asset classes. There's hospitality, which includes hotels and motels and things of that nature. There's industrial, which includes warehouses and self-storage units and things of that nature. There's the typical retail, where you own some shops, maybe a strip mall or a shopping mall. There's a variety of different asset classes, but one of the major asset classes in commercial real estate is multifamily. Now you may be thinking, well, that's the same as residential real estate. It is, and yet it isn't, because multifamily means either you own a lot of units in a particular spot, in a particular building. So you own, let's say, a building with more than 6 residential apartments that are going to pay you rent, maybe 100 residential apartments, or it can be a combination of residential and some other asset class of commercial, like a mixed-use property, where you have one retail store or maybe 2 or 3 retail stores with apartments above them on a main strip in a great location. You could have 5 or 6 apartments, maybe even as little as a 2-family situation, 2 apartments over a retail store, because it's mixed use, meaning there's the residential component, the 2-family house, underneath a commercial component, a retail store. It qualifies as a commercial property. And why does that matter? Well, let's find out. I know you're going to really like what I'm about to detail for you. I'm going to show you why commercial real estate is so much better for investment than residential real estate, the incredible advantages it has. And because I know you're going to like it, you know what I want you to do. I want you to hit that like button for me to help feed the YouTube algorithm and circulate this video to the masses, because I really appreciate it. And obviously, if you're not yet part of our Confident Real Estate family, consider hitting that subscribe button as well. All right, now that we got that out of the way, what are the 2 major factors? There's a lot of them, but the 2 major factors that I find to be the most beneficial about commercial real estate over residential real estate, well, they would be the power of ownership, how you buy the property, because it's very different buying commercial real estate than how you buy residential real estate, as well as the second thing being the power of financing. In a residential situation, you're buying a residential property and you're taking out a mortgage, and there's really no room for negotiation on those loan docs. Residential mortgages are highly regulated. You are going to get a template mortgage, and the only thing that's going to change is the amount they're lending you, the interest rate, maybe the amortization, and the period, the term of how long you have to pay that loan back. Other than that, not much changes. You're still going to have to personally guarantee that mortgage. In a commercial scenario, there's some other options available to you. But let's first start with the power of buying the property, the power of ownership, how you buy a commercial real estate property versus how you buy a residential investment property. The ownership structure. When it comes to buying a piece of residential real estate as an investment, you know how it works. Whether you're buying a single family, 2-family, 3-family, what have you. If it qualifies as a residential property and is going to get a residential mortgage, then it's a template mortgage. It's very hard to put a pool of money together from a collective group of friends and family in a residential deal on a residential mortgage. So, the alternative, if you're buying in a commercial context, is that you open up a special purpose entity, some kind of corporation or limited liability company. Typically, it's an LLC, a limited liability company. And the benefit there is that the entity is buying the property. So instead of buying a 3-family house and 12 people are listed as the owners on the deed, when you buy a commercial property, you have one entity, one LLC that's buying the actual property. And then you have an operating agreement for that LLC that lays out who's in charge, who's managing the property and the deal, what your responsibilities are, and who are really the limited partner investors that are investing $1,000 here, $2,000 there. The bank in the commercial context is going to want to see who is the deep pockets, who's got the money that they could go after if everything goes sideways, who's managing the day-to-day in the deal. Those are the people that are typically going to be the guarantors personally on a commercial mortgage. Everybody else, like your Aunt Fanny and your grandmother, they don't have to be guarantors. There's a lot less risk for them. They are limited partner investors, limited members in your LLC. And that is a huge benefit and something that will make your life significantly easier when it comes to pooling money from friends and family who want to invest with you but really don't want to be on a personal guarantee to a financial institution. We already touched on it a little bit, but the financing aspect of commercial real estate is just phenomenal compared to a residential situation. When you buy a residential property, like I said, the only things that change are the amount of money you're borrowing, the interest rate on the loan, the amount of time you have to pay it back, that term, whether it's 15-year or 30-year, and your amortization rate. That's it. Pretty much everything else is non-negotiable. But when it comes to the commercial context, a commercial mortgage is pretty much all negotiable. You have the ability to negotiate with your bank because you have leverage, and the banks want to create a relationship with you because they know you're a real investor. You're in the commercial real estate market, and they want to see your portfolio grow because they want you to come back to them for multiple loans over the next 10, 20 years. They want to become your best friend. So you have the ability to negotiate provisions like what constitutes an event of default. If I, have the insurance run out on the property, give me a notice so I can go fix it and get my insurance updated. If I don't pay you, you have to provide me a notice that I didn't pay and a time period to pay you back before you accelerate the term. Those are standard things. But then there's things like a non-recourse guarantee, meaning you are personally guaranteeing the loan if you do something negligent or malicious or fraudulent. But if you're not, just the economy went sideways, then you may have the ability to walk away from that property because the borrower is guaranteeing the loan. And the borrower is an empty LLC that owns nothing but the property. It all goes to hell in a handbasket. You turn around, you hand the deed over, a deed in lieu of foreclosure, to the bank, and you walk away unscathed. Your personal assets never get touched. That comes with experience in building relationships in the commercial mortgage context and the commercial real estate world. Lenders will get to that point with you because they know that there's a relationship there that they want to continue to build on, and you're going to take out loans with them versus a different financing institution if you can get a non-recourse guarantee from them. So that's a huge component of commercial real estate investing and commercial real estate mortgages. And another huge component is structuring the financing and payment terms, because on a traditional residential mortgage, you're paying principal and interest for 30 years or for 15 years. And it's a fully amortized loan, meaning at the end of that 15 or 30 years, the entire balance has been paid. Principal has all been paid back plus interest. Where in the commercial context, you may be able to negotiate let's say a 10-year loan with a 30-year amortization, meaning that your payments are going to be as if you were going to pay the full loan off over 30 years, but it's a 10-year loan. That lowers the amount you have to pay back every month because you don't have to pay the whole loan back in 10 years. And in addition to that, you might even get an interest-only period, like 5 years interest only, and then at the 6th anniversary of your loan, you start paying back some of that principal. That frees up your cash to go and do the renovations and whatever upgrades you need to for the property in order to increase and force the equity value of the property. Because at the end of that 10-year period, most likely in year 6 or 7, you're gonna go and refinance that property because you've done the renovations already, you've got better tenants in, you've raised the rent, you've managed the property better, and now that property, let's say you spent $500,000 on, is worth almost $1 million. And you could go and take out a loan for $700,000. And that $700,000 loan frees up $200,000 more than the original loan for $500,000 that you took out. And you could go buy another property with that $200,000, or you could put it in your pocket and spoil your family. And you know what? It's a debt. It has to be repaid, but your tenants are going to repay it for you. So it is tax-free. It is your money, tax-free, $200K. That's the power of commercial real estate, because you could go refinance that property now that it's cash flowing and pull some of that equity value out, but you're not stuck in a situation where you're paying principal and interest on the property over a 30-year term till you pay the full debt off. You can never pay the full debt off. Just keep refinancing commercial real estate. That's what people do. Commercial real estate investors do that every single day. Trust me, I represent a lot of them, and I am one myself. And you just keep refinancing and upgrading your property and enjoying the capital appreciation. And you can negotiate the terms that are best fit for you, for either a cash flow perspective or a capital appreciation perspective. And that you cannot do in a residential mortgage. There is no negotiation. In the commercial context, almost everything is negotiable. It just depends on your experience and your relationships with your lender, and the more you do it, the better those terms will become in your favor. Again, I hope you found this video informative and at least opened your eyes a little bit to the benefits of why commercial real estate is so much better than residential real estate. You should look into the different asset classes that I mentioned at the top of the video, because you could go invest in a multifamily property that has a retail space below it, and that counts as commercial real estate. And it may not be as expensive as you imagined it would be. You could also go invest in a apartment building with more than 6 units, and that's commercial real estate as well. It's typically above 4 units, starts to become commercial real estate. These are things you need to be on the lookout for, because while it may seem considerably more expensive than buying a 3-unit that you're comfortable with, you have the ability to structure your financing and structure your ownership so that you can get in there with your friends and family who want to invest in a deal with you and really maximize your returns and maximize your cash flow, maximize your capital appreciation, and negotiate the terms to benefit the structure that best works for you and your investing partners, which again, not always the situation, actually quite rarely the situation in the residential world. If you like this video and you haven't done it yet, please smash that like button. And if you haven't joined this Confident Real Estate family, I really hope you do. There's nothing preventing you from doing it. It is all free information. It is good information, and we want you to be a part of our family, so smash that subscribe button. And if you have comments or questions about anything that we covered in this video, leave them down below in the comments section. As always, I appreciate you watching to the end. Until next time.